All right, folks. Something new we've been working on for the last few weeks. We're still trying to make sure that it is working for us. Is we got a new charting system here. So what you're looking at is the QQQ, which is the NASDAQ. So the three charts we mainly use are the price percentage oscillator, the MACD, which is a moving average convergence divergence chart, and we also use a derivative oscillator. So off of these three charts, we're hoping to try to get a leg up to see when we need to make moves. And the time frames we want to use are the 2-hour and the 4-hour time frame. So this is how things are set up as we left this past Friday. Let's look to the 2-hour, see what we have. Okay, so on our price percentage oscillator, on our 2-hour time frame, our green line tells us if our green line is above the red line, that means it's positive. Green line below the red line means that it is negative in our case. So since the 2-hour green line was above or below the 2-hour red line, it started looking like the price percentage was going down. Let's switch it to the 4-hour, see what we got. On our 4-hour chart, you see our green line still above our red line, but it looks like it wants to go below the red line. Let's look on our day chart. So on our day chart, the green line looked like it wants to come above the red line, but we really want to stick with the 2-hour and the 4-hour chart. So the 4-hour chart was still positive. Ordinarily for Monday, we would have just left it. We would have just left our allocations at least partially aggressive. But seeing as we were waiting for a U.S.-China deal off of the G20 meeting, we did not want to take a huge gamble on that. We'll wait to see what the results are and then go from there. So on Friday, we were back in 100% Putnam stable value, even though after the meeting concluded, it looks like we could have stayed with 35 to 55% Putnam, 50% Harbor Capital. And we would have made a nice little game for tomorrow, which is Monday. Let's see what else we got. This is the price percentage oscillator. When we look off of this MACD chart, you see on the daily, the blue line here is the same as our green line in the other chart. It's almost above the red line, so it looks like it's going up. But let's look at the 2-hour and the 4-hour. You see on our 2-hour chart, the blue line is below the red line or orange line, whatever color it is. 4-hour chart, blue line is above the orange line, but the strength of it is weakening, and it looks like it was going to go below the orange line. So that's one of the major reasons why we decided to switch for Monday. The biggest reason is we were waiting for the outcome of the U.S.-China trade deal negotiations at the G20 meeting. So any big decisions like that, we always want to stay conservative. Let's look at the last chart. Okay, so for our derivative oscillator, if you look at let's look at the day chart first. The day chart, the derivative oscillator is still negative, but each day is getting less negative. On the 4-hour chart, you see that the graph is positive, but it's getting less positive. If it was still getting more positive, we would want to stay pretty aggressive, but it's getting less positive. That's one of the reasons why we decided to switch more conservative on Friday. Let's look at the 2-hour chart. On our 2-hour chart, you see the 2-hour chart is getting more negative. So since we're using a 2-hour chart and a 4-hour charts or time frames, those are what we're going to use for our triggers to tell whether we're going to switch for the next day or not. So stay posted. We're going to test this out for a long period of time. Each week or each couple of weeks, we'll let you know how we did. Thanks. Like, comment, subscribe, share the videos. Later.